To be a profitable trader, there are three things you must know before you execute a trade. You must know how to identify the trend of the market. You must know how to analyze the market using technical or fundamental indicators. Then you should know how to define the risk on a trade before you execute it. And the third thing is to know the potential profit you can make on a trade. Now, if you're able to define the risk, defining the reward wouldn't be a challenge. Okay, you just need to apply a good risk reward. So let's say the risk on a trade is $1, or let's say 40 pips. Your risk reward, if you're applying 1 to 2, that will be your reward will be 80 pips if you're risking 40 pips. Okay, if you're risking $20 on a trade, your reward should be around $40. I always advise that you don't go below risk reward of uh, 1 to 2. Anything below that is not a good risk reward. Okay, so now what's been playing out on Australian dollar JPY? Now, like I said, you need to know the trend for the week, and to know the trend of the week, you need to start with the weekly time frame. After the close of the market on Friday, you need to see how the candlestick on the weekly closed. Okay, the candlestick pattern on the weekly time frame will determine the direction of price for the new week. Okay, so if we look at the weekly time frame here, what we have here is a bearish reversal pattern. Okay, now at this point we had a resistance level which was a supply level. Okay, now demand increased and there was a breakout from that resistance level, or you call it your supply level. So when demand exceeds supply, we expect price to keep going up. But you see what played out here now. A lot of retail traders would have jumped in, okay, because they will see this as a valid breakout. Okay, they will see this as a valid breakout, and they would have jumped in and executed a buy trade. But I'll tell you why price broke out from this resistance level. The reason price broke out from this supply level, or the reason demand exceeded supply at this level, was the liquidity residing at this previous high. The liquidity residing at this previous high was the reason price pushed up from this point, this area of liquidity. Okay, because after the formation of this hanging man here, a lot of retail traders would have executed sell, and where would they set their stop loss? Their stop loss will be few pips above this level or the highs of this candle. So the institutions had to push price up, okay, because they know if they execute their orders around these areas or these levels, institutions don't just execute trade at any level. Okay, they either aim for liquidity or imbalances in the market. That is where they execute their trade. So as a trader, you should learn how to identify areas of liquidity and areas of imbalances in the market. It is very important that you know this. It is very important. It will help you in minimizing risk. It will help you in setting, good profit targets. As a trader, you need to be able to predict what price will do in the future. That is where you're trading. You must be able to predict. Most traders don't know how to predict. What they do is react to price. You don't react to price. Anyone can react to price, but you need to know where price is heading to. Okay, that would help increase your winning rate. Okay, so what they did was to clear liquidity at this area. Now, like I said, this was a supply level which this demand exceed supply. Now, what happened last week? You see what happened last week after the close of this candle above this level. A lot of retailers have jumped in because they see this as a valid breakout. What happened last week? Price came in back and closed below this resistance, which became a support. After this candlestick broke out from this resistance became a support. I hope you get that. Now, this tells me that this breakout was a false breakout. Now, understanding the concept of liquidity made me understand that this breakout could be a false breakout, and this, after the close of last week candle, it confirmed that this breakout was false. You can see that. So it's very important. I would advise you go learn the concept of liquidity. It will help in in reducing your increasing your winning rate and accuracy in your entries. Okay, so now the trend is bearish. Like I said, you need to know the trend for the week. So the trend for this week we are in right now is bearish. Now the next question will be, where is price heading to? Where is price going to? Now we've used the candlestick pattern to define the trend for the week. The next question will be, where is price going to? Okay, and like I said, price will aim for the next area of liquidity. Now liquidity resides at previous lows or previous high. Is that simple? Liquidity resides at previous lows or previous high. So where is price heading to now? The recent swing low is this. You can see. Okay, this is the recent swing low. So we have a liquidity level here, the low of this bearish candle. Okay, a lot of stop losses at this level. So this will be the first area of liquidity. As you can see, they've already hit that area of liquidity. If price breaks out from this level of liquidity, it will aim for this next area of liquidity, because there are a lot of stop losses, okay, residing at this low. Okay, and if it successfully breaks out from this low, it will move to this next area of liquidity. There are a lot of stop losses at these levels, and the institutions will aim for those levels because they want their orders to go through. They want their orders to be successful. Remember, for every buy order, there must be a sell order. So if they are throwing millions of dollars into the market, they will need willing traders, people who are willing to do the opposite of their order. So if at this point they want to sell, they need a lot of buy orders. They need a lot of buy orders. If they want to buy at this point, they need a lot of sell orders. And here you have a lot of sell orders at this point. Remember, when you are buying, your stop loss is a sell order, is a sell stop order. So there are a lot of pending sell orders at this point. So if the institution wants to buy, they need a lot of pending orders, pending sell orders, and this is where they will get their orders executed. So there's a high probability that they will push price down to this area of liquidity. Okay, so you need to go learn how to identify these areas of liquidity and areas of imbalances in the market. You can go on YouTube, you can go on Google. There are a lot of free stuffs on YouTube and Google that teaches on concept of liquidity. Just do your homework. Do your homework. It doesn't matter whether you are using indicators to trade. It doesn't matter whether you are an ICT student or SMC student or Elliott Wave student or candlestick pattern trader. Understanding the concept of liquidity would help increase your winning rate. It will help minimize your losses in the market. So I would advise you go study this concept. Go study the concept. Okay. um okay, so just go online and do your research on concept of liquidity. I hope this helps. Committed to your training success, Maxwell Emmanuel.